Let's take a look at 4 financial statements that we will be using in class. The first one is income statement, then owner's equity statement, balance sheet, and the last one, statement of cash flows. In this class, we really will concentrate on the first 3, and our very last chapter of this term will be devoted to the preparation of statement of cash flows. Okay, so how about the very first statement that is called income statement? How do we calculate income? Income is a result of comparison between revenues and expenses. If your revenues are greater than expenses, you get net income. If it's the other way around, so expenses are larger than revenues, you will end up with a net loss. And what is very important for every single statement is you must have a very good title for all of them. So for a good title, that means you will have to say which company does it belong to. So in this case, it's SoftBite. So you will write SoftBite, and then you will write the title of the statement itself, that is, it is an income statement. Then the last one is the date. Why is the date important? When if I ask you, I'm making $2,000, is this a lot? Is it very little? You really don't have a frame of reference. If I tell you I'm making $2,000 a month, well, it's okay. It might be not as good as you would like to, but what if I'm making $2,000 an hour? Oh, that's a big difference, okay? So that's why you have to write out how long did it take the company to make this much, this $3,000. And in this case, it was for the month ended, so it took them a month. And again, be careful, it's not one date. We will not put September 30th here. Otherwise, it will look like it's one date, and on the September 30th, they made this much. No, it's for the month ended September 30th, 2020. So again, this statement, we're calculating income. You need 2 large groupings, revenues. You're going to list all the revenues that you have. If you have more than one group of revenues, it will go in here. And then expenses, you will relist all the expenses as well. And you'll see that we usually put them in 2 columns. It's really to put subtotals, and then you will have total expenses and total revenues. And here's your net income. What about the next statement? The next statement is statement of owner's equity. It will have identical title. So again, it is for the month ended. And if you look carefully at this statement, it's nothing more than the explanation of what happened to the owner's equity during that particular period. So the period started with owner's capital, so the share of ownership as of the beginning of the period. So this date is important and this date is important. If you omit this and omit this, they will look the same, owner's capital and owner's capital. Then what's the difference? Well, the date is. So you have to put the date in there. So it looks like it's a brand new company. We started with nothing. We didn't have our famous lake. It was just a desert. We started with nothing. And then our rivers started to come in, right? The owner brought in an investment, $15,000. And then instead of showing revenues and expenses, we can reuse some information that we created in the prior statement. So we will use net income, which is a combination of revenues and expenses. And then we're going to subtract drawings, how much the owner withdrew. And here is the owner's capital share on September 30th. Okay, so again, these 2 statements are for the month or for the period ended. It could be for a quarter, for 6 months period, for 9 months, for a year, whatever it is. One more statement. It's your balance sheet. What is balance sheet? So the word balance is hinting. What are we balancing out? So if you look, you have total assets, roughly $18,000, and then liabilities and owner's equity, again, $18,000. Then what is it? Well, it's your basic accounting equation. So balance sheet, you're balancing out that equation. If you remember, your assets must equal your liabilities plus owner's equity. That's exactly what we're showing. So this financial statement is the only one out of 4 that is actually as of particular date. I'm going to go ahead and write out that date. So that will be dated 9/30/20, one date. So it will not be for the month. It's more like you took a picture with a camera and you know on which date it was. So you will list again all assets. Then you're going to list liabilities. If you would like, you can even put the heading up here, liabilities, then list them up. And then owner's equity, and list that up as well. Now, for owner's equity, you do not have to list all the pieces of equity again. You can go ahead and reuse the information that we have. You know what your owner's capital as of that date was, so you're going to use that data from the owner's equity statement, $16,450. Okay, so the last one will be your statement of cash flows. Statement of cash flows is the hardest. That's why we're going to keep the best for last. What does it tell you? What does it tell the user? It tells where or how we received our cash and how we spend it. So you show the cash at the beginning of the period. So in this case, beginning of the year, or beginning of September. And then we had some operating activities or operations. We had some investing activities. The last one, we had some financing activities. We know where we either received or spent cash. And here's your cash at the end. And you can see that it must agree to the balance sheet as well. I have a few slides that I kept that kind of discuss the statement. You can pause and read as in here, but I discussed it. We're going through the statement. Now, I really like this picture. I apologize, it's a little bit blurry, but I've kept this slide for many years. If you can see, it still has the year 2002. Okay, so this is your financial statement articulation, or how financial statements are all tied together. So I actually have more than one period here. So soft buy just started on September 1st, so your statement of owner's equity started with a 0. Well, this company has been running. How do I know? Look at this balance sheet. That's where it starts. We have it dated as of 12/31/02 or 2002, but it's also the beginning of the new fiscal or financial year. So it will be 1/1/03 as well. Okay? So it started the operations. So if you can see, here's your income statement for the year 2003. And you have your revenues minus expenses. Here's your net income. Then we're going to use that net income in preparation of the statement of owner's equity. And guess what? The beginning balance for your owner's equity, owner's capital, came from the last balance sheet, because that's how we started. Again, you can put up here 1/1/03 plus your net income minus drawings. Doesn't look like the owner invested any more capital. And here's the ending balance at the end of 2003. Okay, we will use it in the balance sheet for this year as of 12/31/2003. So you have cash and other assets, right? And then you have liabilities and owner's equity. And again, the balance for equity is forward from your statement of owner's equity. So assets equals liabilities and owner's equity. And you can also see how statement of cash flows is tied. Here's your beginning cash tied to the beginning balance. And here's your ending cash, again, also tied to the cash at the end of the year. So it's kind of cool, and it's almost too hard to comprehend, and sometimes it's pretty hard to tie it all together. You could be off by $1, which is a rounding error, and you have to figure out, what can I do about that $1? We will use this financial statement articulation in a couple of exercises that we have. And for the next year, 2004, you're going to start with your balance sheet as of 1/1/2004. And fiscal years go on as we assume the business will be continuing indefinitely.